you're a Florida Gator, living in Bulldog County now. Is that right?
My dad was an accounting professor at the University of Florida, so I grew up going to Gator games when they were terrible in the 70s and 80s, but I became a Gator fan. And of course, I moved to Atlanta in the early 90s when Spurrier came to Gainesville. So I missed the whole Spurrier run there. But that was actually a good time to be in Atlanta because the Georgia fans had nothing to say to me back then. Unfortunately, they have plenty to say to me now, but
Right.
that just kind of
Develop
comes
a
with the
thick skin.
territory, I
Yeah,
guess. Yes,
absolutely. That's great.
that's right.
Cool, Dan. Why don't you kick us off? Tell us a little bit about your background and what you're up to these days.
After high school in Gainesville, wanted to get away from Central Florida and go somewhere with seasons. So I went to school up in North Carolina, met my wife there, and we settled here in Atlanta in 1991. Did a couple years with Arthur Andersen Big Four, went and did some industry things, and then in 2004 got recruited to come join a small boutique fund admin here in Atlanta, which was formed around 2000, called Partnership Financial Consulting. So PFC, I was employee number 5. The founding partner, who actually coincidentally was a connection from Gainesville and the UF as well, but Michelle was looking to kind of grow the business, and so asked me to join, which I did. So anyway, we kind of jumped in, and honestly, after a career to that point in corporate accounting and audit initially, fund accounting was kind of different, right? I mean, it's still accounting, but there are things about fund accounting that are just different from traditional corporate accounting. So I joined that firm when I was 35 years old, and my skill set was probably that of a young 20-year-old or something. But anyway, figured it out. Um, and we slowly but surely kind of grew that firm over 10 years. And then Michelle needed to exit the business to go full time with a client. And that client is still a big hedge fund client of ours today, called Masters Capital here in Atlanta. And so coincidentally, or I guess fortunately, one of the founders of Trident, who had been splitting time between London and Atlanta to that point, had approached us in 2008 or so, looking to expand their business in the U.S. And at the time, we said no, thank you, but went back to them in 2013 when they were looking to again continue to grow, and Michelle needed to exit the business. So PFC was acquired by Trident in October of 2013. So Michelle exited. We were a team of 17 at the time. Trident had one fund admin employee here in the U.S. who joined us. He's based here in Atlanta as well. And that was kind of the start of the most, this last kind of 11-year chapter of my career, running the U.S. Trident operation, out of Atlanta. So, the business has kind of grown from, that almost 11 years ago. Again, 17, 18 people. We're about 2 billion under administration, and it's grown to about 80 people today, kind of between 25 and 30 billion under administration. So it's been a busy 11 years. But yeah, I think that's, it's kind of crazy to think about, but the last 21 years of my working life, have been spent in the fund admin industry, which I think is, again, I obviously don't have a history going way back, but I would say has been a very transformative kind of period in terms of this industry in particular. So aside from that, I've 3 kids, a dog, still married to Susan, who I came to Atlanta with in 1991. So just kind of busy all around. But yeah, anyway, the last 21 years, certainly from a professional standpoint, in what you could, I think historically have argued was a fairly boring, and I mean, it's accounting, right? How exciting is accounting? It's really not. Accounting is really not that exciting, but the things going on in the fund admin space actually have kept me and kept the firm on our toes. Certainly, especially for the last 11 years, for sure.
That's
Got
very
it.
cool, Dan, and I definitely can relate to your fund admin experience. I'm curious, from the last, decade or so, there's a lot that's happened to your point in the fund admin world as far as that goes. A lot of different, different types of asset classes developed, consolidation in this space. Love to kind of get your lay of the land and what you're seeing today with the trends in the marketplace and what you guys are kind of seeing and what's happening right now, real time.
Yeah, I mean, I would say that kind of first 10 years with PFC, I think the fund admin world was, you know, kind of a relatively sleepy kind of industry, right? It was a fairly, there were some very big admins, mostly focused on hedge funds. Most of those were kind of traditional long short equity or debt, hedge fund structures. And so you had the very big admins in the space. And then you had a sprinkling of kind of smaller boutique providers like PFC was at the time, right? Kind of working with the smaller managers that couldn't afford to work with, the Sitcos, the State Streets, those kinds of guys. Um, and so, I think what's then towards the end of that kind of 10-year run, and as we started into the time with Trident, um, so about 10 years ago, is when a handful of things started to happen that have really kind of dramatically changed the industry, right? So one, I can tell you for sure that back when PFC was sold to Trident, was not in any way the same. There was not nearly, I would say private equity money was just beginning to come into the space, like trickle into the fund admin space. Um, and so, there was not then the kind of frenzy there is today of consolidation in the fund admin industry, right? So that's a big one, is PE money deciding it was smart to come into this particular industry, which, who would have thunk it? And now it's kind of evolving into PE going into audit and tax with the CPA firms, right? So that's kind of like they're just getting started with what fund admin kind of started doing maybe 10 years earlier. Um, and so there's, the inflow of capital from private equity, a lot of it from European firms coming into the US, for example. And again, a lot of that is triggered by, the other development, which is fund admin has transformed from being largely focused on hedge funds to now, diversifying and fund admins being wanted and needed to administer venture capital funds and private equity funds, right? So the fund structures, fund types that investors and GPs are looking to have administrators get involved with has certainly evolved and kind of broadened a lot. Not to mention, Skylar, the new asset class being created literally in the last decade as far as hedge funds and venture capital funds, the digital asset space, right? Um, so there's PE money coming in. There's the that expansion kind of across kind of asset classes, asset types that we have to do work for. There's the continuing evolution and kind of emphasis on technology as being super important to what we do, right? And now that's even kind of going into blockchain tokenization, those kinds of things. But just to, as a frame of reference, when I started at PFC, we were using QuickBooks and Advent Access and Excel spreadsheets to do mail merges, to do capital calls and distribution notices for committed capital clients, right? And at the time, we didn't think we were really behind the curve that much in terms of how we were doing things. That's just, we didn't have the big kind of, we didn't have the scale to build out our own internal tech. And yes, we were using an Advent product, um, but there wasn't this proliferation of technology in the PE space and in the hedge fund space and what have you that there is today. So technology has become incredibly more important to this industry and to what we do. I would say that the regulation has become increasingly had an increasing impact on our business and what GPs expect, and because the regulatory requirements, whether it's in the U.S., in Cayman, kind of jurisdictions around the world, there's just increasing need for, the regulators want to know more. They want increased reporting. They put increasing requirements on the GPs, which then flows down to, the firms that have that data and that process that data, which is us, the fund admins, right? So there's increasing information returns. Investors have become more sophisticated, right? They want to know more about what their investments. They want it faster. They want to get to it on their phone, look on their phone, and access their capital accounts and kind of see where things stand. So that whole kind of emphasis on technology has really, accelerated, especially over the course of the last, 10 years or so. So yeah, I would say the environment between, increased competition, increased focus on regulation and the data behind it, increased focus on data for the investors in these funds. It's just not the same playing field that it was, certainly that it was 21 years ago. And I would say it's even dramatically changed a lot over the last decade for sure.
Yeah, there's a lot to unpack there. It's great to get these insights because there's so many changes, it sounds like, happening over the last couple decades. I'd like to unpack a couple of those things. Let's talk about the in terms of like private equity moving into the fund admin space. Why don't you tell us, kind of how did that start and kind of what does it look like today? And, kind of how are these private equity funds, going about their business?
I think it kind of started when the PE guys kind of realized or figured out that the percentage of private equity funds that had administrators in Europe, for example, as a percentage of total, far exceeded the historic or kind of past percentages here in the U.S. So here in the U.S., if you were a PE or a venture, GP, the investors, they weren't really that concerned about the Bernie Madoff risk of a private equity guy or a venture capital guy who had kind of illiquid long-term investments, right? There just seemed to be less risk for fraud and for misappropriation of money. But having said that, I think that the investors realized that there was this increasing trend of GPs wanting to bring in administrators or being asked to bring in administrators by their investors, right? And so if you kind of did the math on the PE venture fund, the real estate fund market in the U.S. on a gross basis, and you kind of did that math on, well, if we go from, I'm making up numbers here, but if we go from 30% funds administered in the U.S. to Europe's at 60 or 70%. And I'm kind of making up numbers, but it's in the range. It's in that kind of general kind of ballpark. The potential revenue flows into fund admins was a significant number, right? And PE shops they're all about making money for their investors, and so they saw a big opportunity there. So they started dipping their toes in and kind of buying kind of small to mid-sized shops. And then they started consolidating. And then other guys came in. And next thing you know it, you've got really massive investments being made by private equity firms into existing administrators and also firms that, at one point offered technology solutions to the fund space, but decided they wanted to branch out and grow into fund admin. And, here's a private equity shop willing to give me 100, 200, $300 million to build out my tech, to hire sales teams, right? So I think that's where, a lot of that capital, and again, we kind of feel that at Trident because, again, we're competing with these other firms that all of a sudden have all this cash to deploy in technology and to build sales teams and to do fancy marketing and, take the gold sponsorship at a conference kind of thing. And we're fine with that. We're okay to compete with these guys. But again, it's certainly gone from, a situation where we would be in, competitive bids with a couple of admins, 10, 15 years ago. And today you might have competitive bids where you're one of 10 going after a piece of business, right? And again, it's just that there are that many more firms competing in this marketplace. So yeah, so I think the PE guys came in, deployed capital, and again, I think a lot of that investment has gone to to the point earlier to fuel that development of technology and the implementation of technology in their processes, as well as to build the sales teams and the marketing within those organizations to go out and sell that business, right? And then the other point, which I didn't touch on earlier, but again was certainly, and it was not a new trend 10 years ago, but in the fund admin space, it has just become increasingly more normalized, is the offshoring of labor, right? Because again, with so much competition, it's one of those funny things. Well, it's not really funny for me in my seat, but it's one of those funny things that, I mentioned the increase in demands for data from investors and from regulators, for example, right? So there's increasing demands for what we produce to our clients and to their investors and to the regulators. But at the same time, there's so much competition piling in that fees are still being compressed. So you're being asked to do more, but you're getting paid less to do it. And so how do you get around that, right? So historically, one of the avenues to get around that was, well, we're gonna build a team in another part of the world where we're not paying U.S. accountant type wages, right? And that's another kind of, we could go down a rabbit hole with the whole kind of COVID great resignation of accountants, but we don't need to. But um, so there was the impetus to move to lower cost labor so that you could continue to have margins on what you do. And then what that is actually evolving to, and again, circling back to the technology piece, what that is evolving to over the next 5 years, I would say, probably not 10, but over the next 5 years, is I do think that the automation of processes, this kind of just burst of activity around artificial intelligence, the digital asset space and the blockchain and things that are being done there. I think that there's just going to be an increased move for fund admins to adopt technology that allows them to automate processes and not. So rather than have 100 staff sitting in India or the Philippines or somewhere else on the other side of the world, they're going to have machines doing a lot of that basic processing that they do, right? So I think it's going to be a way that the owners of the fund admin businesses here continue to drive margins. But again, just because of the advances in technology and automation, I think it's probably not great news for some of those traditional offshore domiciles, particularly for in terms of accounting, right? Because if at the end of the day you're just loading trades and reconciling, you're booking basic journal entries, kind of doing the basic nuts and bolts around doing a NAV allocations to investors, the exact things that the U.S. firms here are teaching those offshore offices to do, they'll teach machines to do. And I think that's probably a next 3, 4, or 5 year type thing. I don't think it's a next year thing, but it's happening. And it's probably in the next 4 or 5 years that it really materially impacts, how fund admins are doing with it.
Definitely, Dan. Obviously, it's going to be going to more of a review process, right, for accounting, where machines are doing the work and you're just reviewing the end output before it goes out to your client, essentially, right?
It will, and again, I think what that does drive is a demand for really smart and talented accountants here in the U.S., right? Because whether you're reviewing the work done by a staff person sitting outside my office here in Atlanta, or a team doing work in another part of the world, or some machines who have done some work, right? You still need a person who understands the fund structure, what's in the fund documents, how fees are calculated, how everything is supposed to work, to review and oversee that, right? And obviously the machines over time will get, just like people do, will get better and better at what they do. So we will catch fewer mistakes along the way. But again, I don't think it takes the need for skilled accountants out of the picture. It just reduces the total number but you still need very talented, skilled people to make sure that everything's happening correctly.
Yeah, definitely. I think, like if the account accountant is doing 10 funds a month, they may have to now do 50, but they can do it now with machines, with AI, or whatever technology they're utilizing, right? To your point.
Absolutely.
Yeah, let's you bring up some good points here. I think talking about the offshoring piece, obviously the multi-jurisdictional aspect of fund administration, right, where everything's global, but it's all interconnected. And even though that may change things with offshoring going forward with technology, you still need to have that jurisdictional insight, understanding of those local laws, when there are different types of funds in whatever jurisdiction they're set up. So talk to us about that, kind of how you see. Obviously, Trident's very global in different locales across the world, different rules,
Right.
regulations. That's important, how to be able to handle that across different jurisdictions as you move forward with funds and structure.
No, it is, and that was one of the kind of the fun and eye-opening things about joining Trident is, again, we went from a 17, 18 person Atlanta-based boutique firm, largely focused on U.S. domiciled funds, U.S. managers, although some of our clients did have some Cayman structures, right? So we were getting some exposure to Cayman. And now in this world of Trident, we cover literally the entire globe. We have offices in Europe and Luxembourg and Malta, headquartered in London. We have offices in Asia. We have the Caribbean with the Cayman, the BVI. We have an office in Mauritius that does a lot of work into Africa, Dubai, in the Mideast. So yeah, it's just been very open. It's certainly been eye-opening. We have some clients here out of our office here in Atlanta who, for example, have opened some Luxembourg structures to European investors, right? Because a lot of European investors strongly prefer Luxembourg domiciled for the controls, et cetera. And yes, they have tons of regulatory controls in Luxembourg, and it was, for especially in a fund jurisdiction like the U.S., where, to be honest, the funds themselves are very loosely regulated, right? So at some point, managers grow to a size where the investment manager has to register with the SEC, but the funds themselves are not registered, right? They're not 40 Act funds. These are private funds, hedge funds, PE, venture, real estate. Um, and so yes, it's just been, and as Americans, we want to dive in and just kind of do what we do for U.S. funds, and our colleagues in Europe are like, well, hold on, we've got to jump through these hoops, and we have to get these approvals, and it's going to take some time. And again, the investors like that because they feel like it's a safe place to invest, right? But yes, I mean, absolutely. If you turn me loose to run the Luxembourg office, we'd be in trouble because literally, I mean, just the volume of regulations they have there, and just the steps you have to go through to do certain things. You really do have to have that kind of on the ground people who have done it for years, and really understand those things. So yeah, I mean, I think that, from our business's perspective, the ability to have, and again, if a client here asks me about, Luxembourg, I don't even say I'm not a doctor, but I play one on TV. I just say I don't know. Let me connect you though with my colleagues in Europe who can give you the answers and give you the correct answers, rather than me, from here in the U.S. try to guess at the answer for you. So that's been really helpful, again, for us to help our clients who want to expand their businesses into other parts of the world, for us to have sister companies and people who have been with this business for a long time who know the answers for sure. Yeah.
Talk about the technology aspect of things. Like you mentioned, there's going to be a lot more, kind of automations involved in a lot of this as you foresee over the next couple of years.
Right.
What are you seeing out there? Are people starting to utilize like AI and different technologies like that to be able to automate a little bit more of this processes?
They are, and I would say that we, as our firm Trident actually is taking some steps in that direction. Again, just because you see kind of the tidal wave of what's happening, right? I mean, if anybody's following the stock market and seeing what Nvidia's done, and kind of the advances there, and again the digital asset and the advances in blockchain technology and things that people are doing there. So yeah, I think there is this, there's this perpetual race, and again, it's getting pushed and fueled by, and again, I guess this is actually a good thing, but it's all kind of being pushed along and accelerated by that private equity money, which has come into the space, and the private equity owners have said, hey, we've invested in you. Tell us how you're using this money to do things better, smarter, faster, et cetera, right? And so, if you want to be a player in the space, you have to be part of what's going on there. And the AI is certainly, one area there. So I think that's, the low hanging fruit there is AI that, for an open end hedge fund that's trading listed securities, that does kind of daily recs and brings in positions and data from the broker and kind of spits out a rec. Or do you need a person to do that and load it into another system, or do an Excel rec like things have kind of been done for years? And the answer is no. You can train machines to do that kind of thing very simply, right? So I think that's well, I say very simply. That's easy for me to say because I'm not doing the training of the machine. But the concept is simple. I'm sure the execution is not quite that simple. But yeah, I mean, it is absolutely happening now. It is interesting because you wonder, and we're a good sized firm. We're an 1,100 person firm. I would consider us a mid market administrator, but you do wonder, how, with the fast moving technology, the pace of development of technology, if the very big firms that have these very big kind of systems, integrated systems, legacy systems that they've been developing in house for 20, 30 years, 40 years, who knows how long, how nimble they will be. But again, then they've got the money to spend to do things, right? So it all kind of evens out probably. But yeah, I think AI, things around the blockchain, one area of technology that's become that has become a thing in the last handful of years is the investor related piece. Like, how do investors subscribe to a fund, right? So in the olden days, which wasn't that long ago, you sent them a subscription agreement, paper subscription agreement. They filled it in. They skipped the middle 3 pages, so you'd have to go back to them and say, "Hey, you forgot pages 10 to 12." And then we as administrator would take that data, we kind of keep keyboard it into our systems, and kind of the investment, the GP would countersign to accept the investor. So it was a very manual, paper driven process, right? And that was fine, honestly, until maybe 3 or 4 years ago. And then all of a sudden, I shouldn't say out of nowhere, but very quickly it evolved into, there were, if there were 10, there were 20 firms out there trying to build electronic investor onboarding platforms, right? Where everything can get done online. Investors just log in, you fill in some stuff, you scan in your driver's license, scan in a utility bill, and boom, submit to the administrator, and you're kind of off to the races, right? And then that's even further evolving now on the blockchain, where investors are able to submit documentation, and maybe in certain kind of sandboxes they only have to do it once, and then they can apply that information to a number of funds they might want to subscribe to. Instead of each individual fund they subscribe to, they go through the same identical process time after time after time after time, right? So and again, probably maybe 3, 4, 5 years ago, you knew that there were some systems out there doing that, not in the blockchain space, but in the kind of the electronic onboarding. And now I can tell you that every single call I have with a prospective client, if it's not their first question, it's their second question. How are my investors going to subscribe to the fund, right? I want it to be seamless. I want it to be easy for them. I want it to be online. I don't want them to have to fill out something and put in a FedEx and send it to your office, right? So that's just an easy, that kind of investor onboarding piece. And then, the actual accounting itself is kind of still the same, right? You're still debiting and crediting, you're still booking things. And so the legacy technology still does a good job of that. But then on the back end, how are you delivering information to the investors and to the GP, right? And again, in the old days, we used to stuff envelopes, right? I still remember we literally were stuffing envelopes. Today, it's what does your investor portal look like? Is it integrated with your system? As the GP, what access to the information can I have? The investors want, can they access it on their phone? Does it pull up a dashboard with kind of a little graph showing that their investment has gone up and to the right, kind of thing? So I think that the investor related pieces are kind of the first pieces that are becoming a lot more kind of impacted by technology, right? And that there are solutions out there now that weren't there, or if they were not quite as numerous, 5 to 10 years ago. So I think it's just really changed a ton. And I tell the team today that it'll be fascinating to see what this world looks like 10 years from now, right? I mean, think about what's happened in the last 10 years. How is this industry going to be different 10 years from now? We're still going to need good accountants here in the U.S., but I think just the role of technology and how technology is used, I think it's going to be exciting to see. I'm not sure, hopefully I'm still around to see it, 10 years from now, but I think it'll be quite dramatic, kind of the changes in this business, and that'll flow into also, changes in accessibility of these investments by investors, right? So fund sponsors these days they're not just wanting the big institutions to come into their funds. They're also interested in, the more kind of high net worth, kind of retail, the registered investment advisor clients come in, kind of thing. So this whole technology thing helps that happen, right? These kind of volumes of investors coming through platforms and into funds. So I think it opens up, it is opening, the technology is helping to open up capital for fund sponsors, right? And at the end of the day, that's what GPs really care about, is being able to raise money. Obviously, they need to invest well and generate returns, but it's that kind of raising capital, which is super important to them. And I think that having that seamless kind of technology on both sides, investors come in, how we communicate to investors, and then easing or making the onboarding of investors and making the investments more accessible to more investors, I think opens up, a lot of capital for the GPs, which is good for the business as a whole.
Yeah, definitely, Dan. There's a lot of insights there you kind of went through, which is great. Kind of going back to technology, obviously, fund admin's been pushed and pulled in multiple directions over the years. To your point, a lot of different, whether it be asset class, infrastructure, new technology, new portal. I even still remember, I think still today we still see fax numbers and PPMs and offering docs, I believe. As you think about that, I remember stuffing envelopes back in the day as well. I'm curious too.
Right.
I mean, obviously we talked about AI and obviously being able to handle a lot of unstructured data. There's still a lot of PPMs and PDFs, subdocs that are being sent. To your point, if there's a digitalized process, it's great. But these retail alt products that can have unlimited investors, still accredited and qualified, sometimes they can regulatorily send in a subdoc via mail, or they could email you one. And now you have to put it into that digital environment, right? So there's always different
Right.
things that we're having to work out in real time. And you mentioned legacy systems as well, where you mentioned blockchain and digital assets, where the legacy systems couldn't handle decimal points in the accounting system. We would think these big players could
Right.
fix it overnight, but and they have the money to do it, but does take time. It does take infrastructure and to
Right.
transform those things. So to your point, I think things will change over time. But it is interesting to see the democratization of investors coming into the space, and now they can, with the advent of other ways to get access to capital, new products, new innovations in the space, where we'll be going. It's pretty fascinating to see. I'm curious as we kind of talk about that whole process, um, talking about specifically just, I guess, digital assets tokenization as one facet we can maybe start with here, along with the other ones you mentioned here. What are you guys seeing in this space? Obviously, that's one aspect of democratizing access to investors and what that looks like from a fund formation, tokenization, digitalization of operations of funds. I'm curious from your guys' lens at Trident what you guys are seeing there.
This business is largely about relationships, right? And so, we got into the digital asset space on the fund admin side of our business back in 2017. And it was from a local CPA here in Atlanta who had a client in Alabama that had some buddies that wanted to get them in to start a buy and hold Bitcoin fund. So, I was the CPA, the tax guy called me and said, "Hey, can you administer a Bitcoin fund?" And I didn't know what a Bitcoin was, but I gave the answer was yes. And then I ran and kind of Googled and what's a Bitcoin and can we figure this out, right? So, I mean, at the end of the day, if we can understand the economics of the trade, we can figure out the accounting for that trade, and then we can bake that into the fund structure, how the fees are calculated, et cetera. So anyway, that was kind of our initial foray, right? So 17 and 18, crypto ran up, and then we had the little crypto winter there, and so some of the enthusiasm went out. And a lot of those funds early on were liquid trading funds, hedge fund structures. And then kind of as it emerged out of that crypto winter, all of a sudden there was an emphasis on the venture capital side of things and people wanting to invest in projects, et cetera. And so, we've kind of evolved our, digital asset administration business. We've kind of followed along with the market, right? And so, early on, there were no NFTs. There were no, the DeFi wasn't really a thing in 17 and 18, but then venture and kind of the DeFi investing and then NFTs and kind of, so it's actually been a very interesting, it's been one of those cases where, I found that the service provider community, we're always a step behind kind of the really adventuresome managers, right? I mean, especially in the digital asset space. I mean, those guys are just very creative in how to invest and how can we make money and what can we do and they want to run off and do that, especially again because this is crypto, it's digital asset, right? It's all technology enabled, and so they want to move very fast and do things. So, but it was a very interesting kind of thing in that these guys all started launching funds, and the lawyers kind of figured out a way to get them going, and then the administrators and the auditors and tax guys all kind of looked at each other and said, well, what are we supposed to do with it? I mean, how do we administer a fund that's investing in Bitcoin and ETH? And what does that mean as far as the audit? Is this an investment on the scheduled investments? Is it currency? How do we audit where these guys are trading, where they're holding coins, et cetera? what does that mean on the tax return, right? Are these tax lots that get sold and there's realized gains? And so is one of those things where really the firms that got into the space along, we and along with a few others, we all kind of just put our heads together and said, well, we think it should work this way, and we think it should work that way, right? And so we all kind of got to a good place, and well, it's an ever evolving place. I won't say that kind of journey of discovery is ongoing because the strategies are continuing to evolve. Um, so so what I would say is that it's one of, again, it was one of those things where there was an unusual amount of collaboration among the service providers trying to keep up with what those managers were doing. So now that's continued to evolve, Skylar, kind of to your point, to not just the digital assets being the assets that a fund buys and acquires, but now managers are wanting to tokenize their investor rosters, right? So they want the for investors to be subscribing through a blockchain process, and then their interest in the fund or tied to tokenized interest in the fund. And does that make it easier to onboard the investors, to administer, et cetera, in a is it helpful in terms of a secondary market and those kinds of things? And that's where where I think all this is going is that I think the managers in the space and the service providers who are a step behind, we have a general idea of kind of where this is going. I think what we are all kind of dragging along, kicking and screaming, or slowly, are the regulators, right? And it's the regulators in the U.S., whether it's the SEC or the CFTC. What's Congress gonna do as far as U.S. It's regulators in other parts of the world who are either embracing crypto or in digital assets, or are saying pump the brakes. No, we're not sure about this, right? So there is this kind of big, kind of there's this kind of waiting game going on where actually I was listening to the radio on the way to work on one of my dreadful Atlanta commutes in this week, but there was a crypto bull on who was saying that they in their view that the space is kind of, because it's kind of treaded water for a few years now, essentially, kind of in terms of a lot of the price of Bitcoin, price of ETH, and other kind of tokens maybe have come down some. But he said a lot of this is just because the regulators haven't just made clear what the regulations are around this, right? And so the big money is not wanting to come in until there's a little more, they feel a little bit better, a little more warm and fuzzy, that a regulator is not going to come in right after they they invest in, and then they change the rules, and all of a sudden their investment goes the wrong direction, right? So I think there's, again, I think probably big picture, a lot of people think this is going to progress, and we all kind of have a general idea of the path, and we're just all kind of encouraging, the regulators in various parts of the world, including the U.S., to go ahead and just decide what they're going to decide and make it public, so that then we can all adjust. Managers can adjust how they invest, and we can all adjust how we do the work to support the funds that invest in that space. So I think a lot of it hinges on regulatory clarity, which I do think is coming, but as with a lot of things related to the government, it takes some time, and particularly in the context of these digital asset managers who move very quickly. The government, I'm sure, to them feels very slow.
Yeah, definitely. It's interesting to see that kind of just the progression. Obviously, with creating a futures market back in the day, now we have digital asset crypto ETFs. But yeah, there's still that uncertainty, at least in the U.S., as to where the puck is going, and where we can get clarity from the regulators in this space.
Yeah.
And then you have separately the tokenization aspect, which is really, to me, a separate situation. You see, for example, there's a 40 Act fund. Hamilton Lane was tokenized, which you would think, well, why tokenize a 40 Act fund that's already liquid? But the instant settlement process, now the operation process is so much faster, quicker, when people can argue, well, that mitigates risk as well if you're able to settle in real time. I think everything really is moving to more of a transparent 40 Act environment. Even on the private side, it seems like that's where the market is going, or that's what it's leading it, if you will. That's where I'm seeing it on my side of it.
Right.
But it's interesting, right? Because then the service providers have to catch up, to your point, have to see where they can fill in the gaps in their process, or create new processes that were never there before in real time as well, which is interesting.
Right. Yeah. I mean, I mean, for us, from our perspective, we think we like the fact that we already have we have experience going out and getting the data around the trades that our clients execute, right? So we're accustomed to how that happens, how we can get that into our legacy system so we can do what we do. So from our perspective, tokenization of investor interest, for example, is a very similar concept, right? It's how do we access that data? How does that provider who's doing that tokenization, how can they provide that data to us, or how can we connect in to pull that data in from them so that then we can do our things, right? I think it's just a matter of understanding where the data sits, how you can access it, what the technology is that you have to have so that you can access it, and then figure out how we do that, kind of our day-to-day jobs from there.
So I know you guys are looking to launch like a cap intro product. Why don't you tell us about that, kind of how that works?
Yeah, so I mean, I think that it kind of goes back to the conversation we had earlier about investor or manager GPs are always looking for sources of capital to launch a new fund to grow the size of their current funds, right? And so and I will say that there are some other admins that are kind of dipping their toe and trying to put something together along these lines as well, but it just so happens that Trident has a big line of business um, uh, outside of the fund admin business, which deals with high net worth families and who need what I refer to as private client services. So setting up corporate trust entities to hold assets, et cetera. So Trident actually happens to have investor capital, some of which might be interested in some of the fund products that are funds that our clients administer. And then obviously we've got this entire book of fund administration clients. And I've never met a manager who says, "Yeah, I don't need to meet another investor. I've got all the money I can take." Right? They are always interested in other sources of distribution capital, and so we are just in effect putting together a platform whereby clients on the fund admin side can post funds that they're raising capital for. It will make that available to clients of ours on the private client side as well as clients on my side of the business. So I have fund of fund clients, right? Their entire business is looking for funds to invest in, right? That's what they do. We have clients who are family offices, who are registered investment advisors. So any clients that and relationships that we have who would be interested in kind of our book of business on the fund side, we're just going to open that up as a service, right? We're not charging for successful investments on either side. We just view it as, this is a way we can provide and add to the service that we provide to our clients, right? Because again, it goes back to all that competition and how are you going to compete, right? And so there's lots of ways you can compete, but one, if you can be helpful, to GPs in again, not promising they're going to get additional investment, but open up their distribution channel, get more eyes on their funds, then we think there's a lot of value there to our clients and to our future clients. And so, we look to have that launched in Q4, the current quarter this year. So we're looking forward to that. But again, it all goes back to just finding ways to add value, to our clients in a very competitive environment.
Yeah, that definitely is a unique opportunity, I would say, and sets you guys apart in the marketplace. Having your own captive client base on both sides, the private client base, and then also obviously your fund managers, GPs, and obviously being global as well. There might be some European managers, or I should say, private clients that may have an interest in U.S. managers. I could see that being very synergistic to your overall client makeup there.
Yeah, I mean, again, it goes back to the what I've learned and kind of from being part of Trident as a global firm is that you know alternative investments is truly a global industry, right? There's managers all over the world launching products, smart guys who know how to invest, creative ways to invest, and similarly, there are people around the world who are interested in investing in those products, right? And a lot of the non-U.S. investors are very interested in particular segments of what's going on in the U.S., whether it's U.S. real estate, U.S. venture capital out in California or in Boston, your hedge fund guys in New York or what have you. So yeah, it truly is a global community, and it's just a matter of trying to bring those people together and let them decide if they want to kind of transact and get to know each other on a go forward basis. But yeah, no, we're excited to get it going.
That's awesome. That's really cool.
Awesome. Well, Dan, this has been a lot of fun. Really appreciate you sharing your insights with us. Taking us back and taking us through the evolution of this business. Thank you so much for the time. Where could people go to connect with you and learn more about Trident Trust?
Yeah, so the website is tridenttrust.com, and my information's there. So more than happy to talk to anybody who'd like to reach out. But again, I really appreciate the opportunity. And yes, this was a lot of fun. The hour went by quickly, which means it was a good conversation. So I really appreciate
Well,
it.
this has been great, Dan. We'll make sure to include all your contact details in the show notes as well. This has been awesome.